Hello, hi, evening, everyone. Hi, evening, everyone. TGIF, right? Great Friday to all of you. Okay, so we've got day 26 going for tonight for Project Options Cashflow. So we're going to discuss a strategy that is very, very close to my heart. I'm going to share with you a strategy that I really, really like on, that you can apply on really, really great stocks over here. Okay, so tonight it's going to be an exciting one. Okay, hi, I'm Kafu. Hi, Josephine. Hi, Diva. All right. So apologies once again for yesterday's abrupt time change over here. All right. So today we're back to the normal time slot of 9 p.m. All right. So I have the special announcement, which I will just keep right to the end of the session as well. Okay, for all of you who will be joining us this evening. Okay, so we'll just take a couple more minutes to have more people stream in over here and join us in tonight's Facebook Live session before I officially commence the session. All right, hi, Kenny. All right, actually, those of you who are with me right now, okay, I understand that some of you, do fundamental analysis on stocks right now. So if you happen to have what you believe is a really, really undervalued stock right now and at this moment, could you leave that stock symbol in the comment section? All right, because I will show you something that you could do with the stocks tonight, okay? All right, later half when I'm done discussing with the strategy that I have installed today. Okay. Now, so if you have a stock that you feel that is really, really undervalued right now in terms of their price, or you feel that a stock has a really, really high, upside potential over the next maybe say 7, 8, 9 months. All right. Okay. Now, put down the stock name and stock symbol into the comment section. Okay, and I'll have something installed over here. All right. Hi, James. Now, I did understand from the team as well. Okay, some of you may not have come across this particular software called StreamYard before, right? So I have actually missed out some questions that some of you have actually posted on Facebook, but it doesn't appear on my feed over here when I go live. Now, so if you want your questions to appear on my screen on the back end over here, all right, could you just click on the button at the top of the post, which requires you to allow StreamYard, okay, to have access to your Facebook over here. All right, so once you do that once, all right, you will be able to comment over here, and on my back end over here, I'll be able to see your comments and your questions as well as they come in. Okay, all right, thank you very much for that. Now, so I'm gonna get the session started officially right now, okay, because it's Friday anyway. I don't want to keep those of you who have joined us over here for too long anyway. Okay, now, so tonight we're going to go into another strategy discussion, which belongs to my I'm Possible Option Booster Strategy series, okay, which I'll be covering tonight. Okay, now, so if you're joining us right now, do the same drills for us. Click on the share buttons, right? Make sure you share out the videos, okay? And when I, announce the surprise that we have in store over here for all of you tomorrow, okay, do make sure, you are ready to receive it, okay? All right, now, hi, Gary. So let me get things right today, okay? I remember, click the screen share. Okay, all right, this time I got it right. Okay, welcome everyone to I'm Possible Investor. Yeah, here we go. Okay, Project Options Cashflow for the entire month of June. Okay, today we are on day 26 over here. So just a standard disclaimer before we start any session, we are in the discussion of strategies over here that can be used in investments, but any stocks that we bring across in the examples today are purely for educational purposes. Do measure your own risk and weigh them out before you take any trades that may be discussed tonight. Okay, all right, so tonight over here is day 26. I'm going to teach all of you how to become the shrewd casino operator. Right now, so what do we mean when we become a shrewd casino operator? Right, I want you to structure in what we call a free lottery trade, right? A free lottery ticket, all right, with a trade that you actually structure over here. Right now, so I'm going to discuss the objectives of the strategy. Okay, how do you use the strategy? Okay, portfolio booster effects. Okay, choosing the right strike and expiry for this to happen, And of course, as I mentioned, if any of you feel that you have a deeply undervalued stock, or a stock that is really, really selling for the cheap right now, and you see an upside potential for the stock, all right, leave that particular stock name or symbol in the comments section, okay, and I'll use it as our examples in this evening platform session, okay? All right. Now, so quiz time. Okay, now, so we start off with a quiz over here, all right, getting interactions from all of you as well. So what we see right now on the screen is, of course, this stock called Intel, all right? So looking at Intel over here, all right, and seeing Intel's chart prices, we are looking at the dip, all right? We're looking at the dip of Intel stocks, right, amidst the COVID crisis, right? So you can see this is somewhere along the lines of March over here, all right, and we are seeing the COVID fall in Intel. So Intel was trading the high of 60s, almost 70 over here, right, before it collapsed all the way to 45 amidst coronavirus crisis. Now, so imagine if you're a strong believer of Intel, which every one of us should be, even despite losing Apple as their big customer, right? They still dominate the markets right now, right now. So looking at this, and when you're seeing a price dip like that, which is almost, I would say, let's just take 65, okay, 65 to 45. So it dropped $20 on a value of 65 back then. So we would say it's almost a 30% drop, okay, a 30% drop over here on Intel, okay, in the span of less than a month. Okay, less than the span of a month over here, you see Intel over here drop 30%. Okay, now, so how will you trade this opportunity? Okay, back in March over here, when you see the market collapse on a stock like Intel. Okay, anyone with ideas? Okay, that means based on what you have learned so far throughout Project Options Cashflow, okay, that means all the different strategies that I've taught and discussed so far over the span of the last 25 days before today, okay, leading up to today. Okay, how would you trade this upside potential? That means, all right, it's a great company. We probably expect Intel to rebound after this sell-off over here, right? But how will you play this strategy out? Okay, what do you think would be a good strategy to apply to be able to, allow you to create what we call the maximum profit potential? Okay, if you want to take a trade on Intel and capture the rebound when it starts moving back up. All right, if you have ideas over here, leave them in the comments right now. I'll be waiting for your comments. Okay. Haha, Kane. All right, you are adopting yesterday's strategy. All right, it's a pretty good one, but today we have something that's even more powerful over here. All right, so today we have something that's even more powerful. All right, okay, now, anyone else would like to give it a shot? If you have ideas over here, leave them in the comments right now. Okay, sorry about that. There's a background noise over here. Okay. All right, just want to make sure I don't miss out on any of your comments, okay? All right, great. Now, so let's see, what do we have? We have Diva with sell put spreads, okay, and then we have Jaslyn and Kenny over here with sell puts, right, which is probably naked puts. We have Kane, who talked about yesterday's strategy, where we sell a put spread and then we buy a call spread using other people's money, all right, the upseller option. All right, yup says call butterfly. Wow. Right, complicating things. Okay, all right, now that's no problem over here. Synthetic, Kenny says synthetic over here. All right, now, so anyone else would like to give it a shot? Okay, now, so what I'm going to do is this, okay? It is all right. Okay, that means everything you have said so far is possible. Okay, selling a naked put will make you money. All right, now, selling a put spread and then turning around and buying a call spread with other people's money that they paid you will work. Right, selling a put spread will work too. Okay, all right, a call butterfly, I would challenge that, because for a call butterfly to work, all right, the stock price has to land somewhere in the middle of the body, between the wings of the butterfly over here. Right, so if you get a good strong move like what Intel did, actually, by now we should have seen it happen, right? The butterfly would actually still be a losing trade over here. Okay, now, so how do you structure a trade, right, that allows you to win, okay, in the event that Intel just starts moving sideways? That means it stops falling, but it refuses to go back up. Now, so if it does that, how can you create profits doing so? And then if it decides to strongly rebound all the way back upwards over here, how can you also be able to generate more profits if that actually happens? That means we're trying to create what we call a scenario where, heads we win, right? Tails we actually still win over here. Okay, all right, now, so the strategy is exactly what we're going to discuss today on our agenda over here, right? And that is this, the free lottery ticket, right? Now, so what is exactly the free lottery ticket? Again, it uses the concept of what we discovered yesterday, which is using other people's money, OPM, all right, OPM. Now, so what it involves over here is just simply this, all right, similar to what we did yesterday, but we're just going naked, all right? So we're going to sell the naked puts, right? That means if Intel is a stock you're willing to own, all right, as actual owner of the stock, all right? So what you do over here is you could sell what we call the portfolio puts, right, or indirectly called the naked puts, right? And then you turn around, right? You turn around, use some of those funds that other people have paid you over here, right? When you sell those puts to buy a call option, right? Because buying a call option allows you to profit from the upside when the stock starts going up, right? Now, so effectively, this is what happens when we sell the naked puts. Other people pay us money, so we get to collect. Okay, and then turn around, right? We're going to take these people's money that they paid us over here, right, and go out there and spend some of that money to buy a call option. And then what do? Right? We're using other people's money. Okay, we're using other people's money right now. So let me show you how something like that could have been structured on the Intel example that I've just showed you just now. Now, so looking at this example over here, right? Let me cut off myself from the screen so it becomes bigger. Okay, great. Now, so if you realize with Intel over here trading at $49, okay, back on March 23rd, all right, now what I could do was I could have just gone all the way to January 2021, all right, okay, January 2021, that's about a 300 days option, okay, 300 days option, so that lasts for about 10 months, okay, so we'll probably expect market to stabilize or actually rebound by 10 months time over here, right, so what I'm expecting to do over here is just this. I'm going to sell what I call a 45 strike naked put, right? 45 strike naked put. Now, what does that obligate me to do? It basically obligates me to be willing to buy the stock, all right? This stock called Intel from my customer, all right, on expiry date, which is January 2021, all right, for a price of $45, okay, $45. Now, if that doesn't happen, this put option is still going to expire worthless anyway. Right, and if it actually happens, all right, $45 is actually a pretty good price, right, to be paying for a stock like Intel. Okay, all right, now, so for selling this option over here, I did this example when the market was actually closed using historical backdated prices. But the broker kind of suggested if I actually sold it 45 put over here on the 23rd of March, all right, I could have gotten myself, all right, a premium of somewhere around 588. Okay, all right, 588. Now, so somebody is going to pay me $5.88, right, for selling this put option. The bid ask that you're seeing over here, all right, is actually the range for the entire day, right? The range for the entire day, right? So when you click on it, usually they give you something that's right down the middle, okay, right down the middle. Now, so 588 is what I can get for selling the $45 put option, right? So what am I going to do? There's two things to do now. If you're happy with a profit of $5.88, keep it, all right, and just go naked. That's fine, all right, and hope the stock don't drop. But if you strongly believe that the stock is going to rebound, that means this is a rock bottom over here. It's going to be temporary. I'm going to see a sharp rebound over here, all right. You could turn around, spend a little bit of that money over here, all right, and buy a call option, right? That was what we did over here, all right. I bought a $55 call option. All right, so I turn around, I spend a little bit of money buying a $55 call option. All right, so it allows me now to participate on the upside as well. Okay, and this call option lasts the same expiry, which is 10 months too. Okay, but the best part is this, right? When I buy this call option, it will cost me only $4.28. Okay, it cost me $4.28. That means, all right, I will collect $5.88, and then I will turn around and pay out $4.28. Now, so you realize at the end of the day, right, when this is done, right, I'm still left with pocket change over here, right? Pocket change to the tune of $1.60. Okay, $1.60. Now, so that means if Intel just refuses to go up, all right, but it refuses to go down as well, right? By the end of this 10 months over here, there is still going to be money for me to make, right? There's still money for me to make over here, right? Now, So moving along, this is a diagram of how the trade was structured. So Intel was sitting around $49.50, right? You could go and sell an out of the money put over here, right, for what we call a long expiry, or what is more commonly known as a leap option, okay? And then you turn around and buy, right, a leap call option as well. Okay, so you sell a naked put, and on top of that, you add on a buy call option. Okay, you add on a buy call option. So what happens over here, right? If the stocks just starts trading around this range, but it stays above 45, right? All these options are just going to expire worthless. That means by January next year, this is going to be worth nothing. This is going to be worth nothing, right? So nothing over here. So what happens is you have collected $1.60 right at the start, right? So this becomes your profit. Okay, so this becomes your profit over here. Now, in the event that it goes down, of course, and it goes below 45, right? You might have to be ready, right, to buy Intel stocks. Okay, you might have to be ready to buy Intel stocks for a price of $45. Okay, but we mentioned over here, buying Intel stock at $45 is actually a pretty good bargain after all, right? If you're really trying to build a portfolio. Now, the thing now about the exciting part is really this. What now if it goes back up? Okay, what now if it goes back up? Okay, now there are two scenarios over here. One, of course, if it goes back up and it takes all the way to January, all right, all the way to January next year, like 2021, to just climb back to 70. All right, why 70? Some of you will ask. All right, 70 simply because, right, it fell from near 70. All right, so all I'm expecting over here is just a rebound to somewhere near where it was. Okay, where it was, that's all. Now, and if that happens over here, oops, sorry. Okay, if that happens over here, you realize this. Okay, all right, for buying the call option over here, I have the right to buy the stock. All right, I have the right to buy the stock at 55. Okay, and if the market price in January is 70, after buying the stock for 55, I could turn around, right, and take the stock to the stock market, right, and sell it off for $70. Okay, now, so doing that means, right, I'll be able to make a $15 profit, right, a $15 profit from this call option. So there's two ways I can make this money. One, on the last day before the call option expires, right, instead of being assigned once it expires, right, I could just sell off the call option and take my $15, right, in claim value, which will be priced into the option premium, right? Of course, the other way, like I just said, was to get the stock, buy the stock at 55, and then on Monday, turn around and sell it when market opens again, all right, trading at 70, right? Either way, you're still going to be left with the same amount, which is $15 over here, right? Now, so if you collected $1.60 to get everything started, right, and by January next year, it really goes to 70, that means you're adding a further $15, right? You're adding a further $15 to the entire trade, okay, and profitability over here, okay? Now, so let's have a look. So how did this trade turn out? It went back up, as all of us saw, right? Okay, in the markets. In fact, on May 25th, okay, May 25th, about 1 month ago from now, Intel rebounded strongly and it went all the way to 62, all right, almost to its pre-crash kind of prices over here, right? Now, we all, of course, know that NASDAQ has been hitting new highs, and Intel is definitely part of the NASDAQ Composite Index. Now, so when Intel hit 62.25 on May 25th, let's look at our options, right? 70 days have passed because when we started, it was worth about 300 days. Okay, right now, it's only about 230 days left, but it's the same options over here. So what happened to our 45 puts? Our 45 puts, right, is now only worth, right, somewhere along $1.80, right, somewhere around there, right? Now, which means we sold it back then. Okay, if all of you remember, we sold it back then for $5.88. And today it's only worth $1.80, right? So just on the put option alone, can you see you have already made profits? Okay, what about the calls then? What about the calls? Now, for the calls, we did the 55 call option. Okay, 55 call option. Okay, now, right now, okay, the stock is at 62.25. So technically, we have what we call a claim value of somewhere around $7.25. Okay, how do I get this? I simply take 62 minus 55. Okay, so that gives me somewhere around $7. Okay, but you can clearly see that the call option premiums were severely inflated. Why? Because there was still a lot of time value left. Okay, now, so this option was simply worth around probably 11.20. Now, and how much did we pay for those put options? We paid somewhere along the lines of 428. Okay, 428. And today it's worth 11.20. Now, so can you see we end up making profits on both the call options as well as the put options? All right, now, so when I close this order, all right, as you can see, all right, when I close this order over here, right, all I'm doing is selling away the call option that I have, right, inside my account, and of course, buying back the put options, right, that is negative, all right, in my account that I've sold. Now, and this order would have been worth a total credit of $9.38, right, $9.38. Okay, now, so that means we have now a profit of $1.60 credit, which we started off the trade at. Somebody paid us. Okay, now, and today by closing this trade for a further $9.38 in profit, that brings us a total net profit of $10.98 for this trade. And the best part, all this just take 2 months. Right? It took 2 months over here for a strong rebound. I wasn't expecting this, but somehow perhaps I had the roll of the dice. I hit the jackpot over here, right? And I was paid handsomely. Right? Now, why? Because if you were doing this trade on margins, right, that means, right, this trade probably only requires a 20% deposit from the broker. Right? 20% deposit on $45 put strike. Okay, that will cost you $9, right? $9 per share. Right? And if you're making $10.98 per share, right, that means in 2 months you have just created 122% profit, right, on this trade. Okay, 122% profit in 2 months on this trade. And what's the best part actually? The best part is this: if you're wrong, right, you could wait all the way to January for this to happen, and you're still gonna get paid anyway. Somebody paid you to wait over here, right? Wait to get your money. Wait to make more money, all right? Somebody essentially paid you to do that, okay? All right, now, so I hope you got the idea of this trade over here. If you have any questions about this trade that I've just shown you in terms of numbers, in terms of profitability over here, right, start throwing them out in the comment section, all right, so I can help you and I can address those questions. Okay, if you have any questions and doubts about, what we've just discussed over here on the screen, okay, type them in the comment section, all right, so I can address them and help you to solve these questions. Okay, if you really do like this strategy so far as well, right, do us a favor as well, right, click on the like button so we know this is one of the strategies that, people who have attended the session actually liked it, yeah, right, actually likes it. Okay, because after this 30 days is up, what we're going to do is we're done with the basics of options, right? I'm actually going to start delving into how do you apply these options in real life trade scenarios. So if any strategies over here are not likable, then we'll probably just give it a miss, all right? And we'll go with the ones that, people have liked more, right, when we discuss them over the course of Project Options Cashflow in June. Okay, so if you actually like this strategy that we shared today, all right, okay, click on the like button on the video as well, okay? All right. I'm getting there, all right, Kane? All right, Kane has a question for us over here. Right, so Kane basically asked Terrence, how do you choose what put strike, what call strikes to buy and to sell over here? Okay, all right. Now, for starters, the easiest is definitely, how much do you expect it to rebound? That means what's your expectation on the upside on the stock? Okay, and of course, where is the support level for you to price your put option at? Okay, all right. Now, but before I go there over here, let me complete what we've prepared for tonight. Okay, now, so how do you use this strategy? Okay, how do you use this strategy and make sure you're doing it right? Okay, now the entire combo, that means the combo of selling the naked put plus buying the call option over here, right? The entire combo has to be done for credit to start the trade. Now, so as you've seen over here, I did the trade and I purposefully structured, all right, the strike prices to achieve what I call a $1.60 credit. All right, why do I do this? Because, right, I've got to wait all the way to January. Right, I might possibly have to wait all the way to January for the outcome to turn profitable. Right, so if I'm going to wait that long, right, I will want to make sure that somebody's going to pay me to wait. Right, so I don't want to start this trade with a debit because it's such a long trade over here, and if I don't get paid for all this wait, and 10 months, right, then it will seem like a rather silly trade to be doing over here. Okay. So the idea is this: always use other people's money. So this trade has to be done for a credit to begin. Now, next, you definitely need to have a directional bias. Okay, that means you felt that the stock has hit rock bottom over here, right? And you're trying to capitalize by getting in right now at the rock bottom. There's a few ways to do it. The simplest one is, of course, outright. You go out there and you buy the stock. Okay, but buying a $45 stock, right? Some of you may not like the idea yet. Okay, now, but selling a put option will be different then. Okay, right? So directional bias on the upside. Okay, and you must have a strong reason to do a trade like that. Okay, you must have a strong reason to do a trade like that. That means you have to justify your view. Okay, so if I say 45, why do I say 45 is a rock bottom? Right, that's simply because Intel is Intel is a stock that we have traded over and over again, right, in our community over here, right? And we realize that 45 is kind of like a rock bottom price and a stronghold price, right, for a stock like Intel, right? And more so when it collapsed like 30% in the course of just 1 month over here. Yeah, okay, all right. So that's basically the idea, because the stock was sitting closer to 50 over here, and I was selling a 45 put. That means I could still allow the stock to drop another $5, or what we would say another further 10%, right? A further 10% before, right? I might actually have to cough up the money and buy these stocks over here. All right. So overall, when I look at this over here, it seems like a pretty good deal. All right. So all I wanted to do was turn around, take some of those money and buy some upside potential. That's why I bought the 55 call over here, because I'm assuming by January next year, if it could cross 60. All right, anywhere above 60 over here would make the trade very profitable, right, and would provide me a very, very good, decent profit ROI to look at. Now, so bottom line, when you feel directional and you want to win on both sides, which means both the sell puts as well as the buy calls, right, this is how you structure the trade. So pros and cons over here, right? You get paid to start the entire deal, you get paid to start the entire trade, right, and you can still profit if the stock doesn't move. Right? And in fact, you can still profit even if you're wrong, right? Because if Intel goes from 49.50 down to 46, I'm wrong, but there's still no liability over here. My liability starts at 45, right? So anything above 45 still allows me to win, right? Okay, now, and plus, I get the leverage over here as an option seller, right? Broker only wants 20%. Do I use 20%? Definitely not, right? But do I pay full cash up front? Definitely not. Right, so what will be a right mix over here, right? In terms of how much do you just need to give in order to, make sure that you don't face any margin calls over here, right? That's something that, I teach my students over here in my community. Yeah, okay, all right. Now, so we've discovered basically the mix over here that is needed, right? To make sure that, in the event that the stock really collapses over here, right, you still have enough money such that the broker is not going to demand a margin call on your account, right? That means you are no panic over here to get rid of those stocks. Right? Okay, so that's the main purpose of it. What does this resemble basically? It resembles the same idea as why people like property so much. Right? Now understand this. People like property so much because they keep telling you, right, I don't need to buy a property with full cash. Right? Now then you'll be asking, isn't that the safest? Right? Why don't people buy property in full cash? Simply because it doesn't make sense as an investment. Right? So the question I always put up to my students or people that I meet is the same thing over here. Then why are people doing this in the stock market? Why are people choosing to buy stocks and putting up full cash to buy these stocks over here? Right? If it can be done in property, why can't it be done in the stock market? So as an option seller or building a portfolio purely on selling options over here, right? This is something that I pay a lot of attention to, right? Because I understand, right? If you lack the capital, right? If you run out of money, all right, option selling, all right, could involve losses over here, right? But if you know exactly what you're doing, right, you can actually do it very well and you can do it very right over here, right? Okay, have I made mistakes over the years? Definitely, all right? I would have busted so many accounts and made so many mistakes over here as well, right? But, every time a mistake is made, it allows you to learn, right? It allows you to learn how to perfect the skill better, right? Now, so with all the mistakes that I made, that's how, I can highlight to students, all right, when they're doing it wrong, when they're not doing it right, okay, and when they're overexposing themselves, yeah? Okay, now cons, loss. Of course, if you're totally wrong over here, you still have to be prepared to accept a loss, okay? And lastly, of course, the stock is the risk, right? Why is the stock the risk? Because when you're selling a naked put, right, if the stock goes bust, right, you're still liable for the entire strike price of the put option, right? So how do you prevent this? Just make sure you're doing it on a stock that you don't believe, right, it's going to go bankrupt, All right, okay. Now, Jaslyn's question, let me address that. Okay, now how do I decide on a January expiry for such a strategy to work? All right, first deal, all right, it has to be a leap option. All right, so that means if you're selling a close enough option over here, right, the put options are not going to be hefty enough, right, for you to have some good money to pay to buy a call option. Right, so you should be looking at something along the lines of 7 months, 8 months, and longer, right, in expiry, if you want to structure such a trade strategy like what I've discussed today. Okay. Sorry, Justin, I hope I answered your question. Sorry. Now, next question, Kenny. We have a naked put there. What is the risk if the direction goes against us? So like I mentioned earlier, the risk is really you being, liable to own the stock. That means, you probably have to close the put option for a loss in January if it's below that, or, you could alternatively come up with the money over here and decide to own the stock. So that would be the risk that you're looking at. Okay. All right. So Kane's question, how do we decide we use today's casino strategy versus yesterday upsell and downsell strategy? Right. I would say this, simple. How costly is the stock? All right. How much can you afford a stock up to based on your portfolio size? If you can't afford to buy the stock, right? Because the first thing is you should be doing this on a good stock, a good company. That's why you believe that there's an upside potential, right? So in the event that it drops, right, the put strike price should be a price that, you should be very happy to buy the stock at. Now, so if you can't afford to buy the stock, then do today's strategy, right? If it's so expensive, companies like Apple, companies like Tesla, right? Whatever beliefs, you may have, I can't stop you. You may believe that Tesla is going to go to 1,005, okay? Who knows, right? But Tesla is probably a stock that's going to be too costly on your portfolio to afford. So you're better off doing yesterday's strategy then. Okay, Kane? All right, I hope I put that into perspective. It's actually a very simple answer, actually. All right, Kenny, does IV play a part in this trade? It helps, right? It helps, okay? But because you're selling a put option and then you're turning around and buying a call option, so you have the opposite effect. You're selling an expensive option, but you're also kind of buying an expensive option. All right. So, I would again say, it doesn't weigh too much over here. Right. It doesn't weigh too much because I'm both selling as well as buying. So, whether it's expensive or cheap, whether the IV is high or low, it kind of offsets each other in the end because I have opposing trade actions, a sell and a buy. Okay. All right, Kenny. All right. Great. Okay. Now, so before I go any further, anybody with a stock idea in mind, anybody with a great stock that they want to portray over here, let me structure a trade for you, okay, and see how, what the possibilities are and what the profit potentials might be over here. All right, anyone with a stock in mind? Welcome, Kenny. All right, so before I go ahead with my own selections and choices over here, anybody with a stock in mind, okay, this is the time to throw it out. Okay, this is the time to throw it out, all right, if you have a stock in your mind right now. All right, WBA. All right, okay, now, so let's go with WBA then. So Jaslyn says WBA. Let's have a look. All right, now, so let me bring it out to a longer time period over here. Give me a minute as well. Let me increase the time frame to 3 years. All right, now, so we can see what WBA is doing over here. WBA is definitely on what we call a downtrend. All right, okay, downtrend, something like that. Oops. Okay, something along these lines over here. Right now, so we could also believe that WBA is bottoming out, right? So we could keep kind of like a bottom over here, right? So this would be somewhere along the lines of $40. Right, so $40. If I believe in the fundamentals of this company, that means you go check, you make sure that the fundamentals are sound, right? You are doing what we call a rebound play, right? A rebound play, right? Now, so you're doing a rebound play over here, right? Then, right, you will really want to see WBA to break this line, right? This line over here called 46, right? Okay, around 46 or 47, right? So if I'm going to structure a trade, I'll probably want to sell like a 40 put, right? A 40 put, right? And then turn around and maybe buy like a 47 call over here, right? So let's take a look, right? Can this be done, right? WBA for next January, right? It's about 200 days left. Let's have a look. Selling the 40 puts right now, all right, would give me somewhere around 450. Let's take the middle. Okay, 450, somewhere around the lines of 450, right? And turning around, I'll probably spend that money over here to buy either a 45 call, right, or 47.50 call, right? So let's take something closer to bring the profitability up, right? So if I buy the 45 call, I could pay somewhere along the lines of 320. Okay, all right, now, so 450 minus 320, that will give me somewhere around 130 actually, right? So the broker suggests to you 137, right? So the suggestion is for you to try 137. You may get it filled, you may not, right? But this is a suggestion that the broker says could possibly get it done, right? Now, so we could try anywhere from 130 over here to 135. That's the broker suggested price. Now, so what you're doing is if you actually are willing to structure this trade, you could sell this combo right now. Did I do it right? Yes, I did it right. Okay, now you can sell this combo right here, right now, and somebody is going to pay you $1.30, right, for you to wait all the way to January, right? So if WBA just sits around the current price, around the bottom, right, it doesn't break the low in March, right, then you're fine, right? That means both options will expire worthless. You make about $1.30, right? Now, in the event that WBA breaks this line, right, breaks this line over here, it could always challenge this high over here at 53. Or it could challenge the high back in November, December last year, which is 63. Right now, so imagine this. If it goes to 55, okay, let's take the two scenarios. If it goes to 55, okay, what you have is a 45 call, right? So if a stock is 55, that means the call option should be worth $10 and higher, right? $10 and higher. That means there's a potential additional $10 of profit on top of the $1.30 that you just saw. So if it goes to 60, that means you're looking at a profit of $20 on top of the 130 that you just got. Okay, if you do this trade. Now, so can you see how the upside potential over here is pretty good? All right, if you have a strong reason to believe that the stock will turn around. Okay, all right, Jaslyn. All right, I hope I addressed your question over here. Now let's pick another stock quickly over here. All right, I have Anthony. Right, so Anthony suggests Starbucks over here. Let's have a look at Starbucks. Right now, so Starbucks over here, it would probably be a trade that I won't structure right now, Anthony. All right, now, why would I want to structure that? Because the low in March over here is somewhere around $50, right? Somewhere around $50. So, you know, if we do get a market sell-off, this stock could possibly come down a bit lower, right? So maybe when it comes down lower, right, that's when I'll structure something like that. All right, okay, because right now you're sitting in the middle, which means if you sell like even a $70 call, right, the stock could go all the way back to 50, all right, okay, which is something that you won't want to see, all right. Yes, it may go all the way back to 95, okay, all right, but it could also possibly go all the way back to 50, all right. So compared to WBA, you know, you don't have such a likable scenario, unless, of course, you say you're willing to cut loss the moment it happens and you're wrong. Okay. All right. Let's take a look. MNK. For once, I have absolutely no idea what this company is. Surely don't know what this company is. Right. Okay. All right. Now, so no problem. All right. Let's just analyze. The first thing you must have is definitely options. Second thing you must have is options that are liquid enough. Okay. Now, so it's sitting at the wrong bottom. Interesting one, Hong Han. All right, interesting one, Hong Han. All right, now, I don't know the reason behind this, but if you really feel strongly behind a reason and you have to believe, for one, right, that this company will not go bust. Okay, so the first thing you have to believe over here is that the company will not go bust. Okay, all right, now, so if you believe in that, then this is something you could probably structure, right? Nothing too fancy as well. The only thing you could do is to sell perhaps a 250 put option, right, for January expiry, and then turn around, right, and buy the $3 call option. Right, okay, you could probably try to do that for even, right, but you can see that it's a much harder trade over here. unless you sell the 250 puts over here, right? And then you turn around and buy the 350 calls. Okay, then you get somewhere along the lines of 10 cents credit. Okay, first, because the stock is really, really cheap. Okay, all right, the stock is too cheap over here. That's the problem why. Okay, now second, of course, if it can rebound, right, somehow it gets a breakout, this has to be a breakout. Otherwise, the stock is just going to sit like that because the stock seems like it's as good as dead over here. All right, okay, it fell from here, right, and it just waffles like that. It seems as good as dead. Right now, so if it does have a breakout over here, right, then you could probably see go maybe somewhere along the lines of 6 or 10, right? Then you have a good trade and a big profit potential, to be looking at. Okay, Hong Lan? All right, last one for today over here, GLW. All right, GLW is Corning. All right, so let's have a look at Corning. All right, so Corning will probably be in the same situation as Starbucks earlier. Right, I just don't like the downside. Okay, I just don't like the downside. Right, so unless you believe that you are fine right now to go in, then you could possibly try somewhere along the lines of 24 maybe, right? 24, right? And then of course, if the upside resumes, you could have a target of somewhere around 30 to 31, or even as high as 34, which it did in the middle of last year, 2019. Okay, all right, now. So I'll probably buy a call option somewhere around here, which breaks this high, 28, right? And then sell a put that's somewhere around 24, if I really have to do a trade right now. Okay, let's have a look. January expiry, right? There's no 24, so you have to settle for 25, I guess, right? Okay, now, so 25. All right, so selling the 25 will pay you around $3, and then you turn around and spend that money to buy the 28, which is what we wanted anyway. All right, now, so you get to make about 80 cents credit, right? But you have to be prepared to own this stock over here, right, for $25. Okay, let's have a look. All right, this stock does pay dividends, all right? So it might be a stock that you're willing to hold, right? It pays 22 cents every quarter, as you can see, a Q over here. Right, so 22 cents every quarter. So in about a year, it pays you about close to 88 cents, right? Close to 88 cents. Okay, all right, now, so that's something you can possibly look at over here. Okay, all right, now, I just got a last stock over here thrown up. All right, so we've got some time, so I'll add on this last stock, Expedia. Right, Expedia is definitely something I won't want to structure right now. Okay, why won't I want to structure this right now? Simply, little upside. All right, what do I mean by little upside? All right, the stock hit a high of around 82, right, which means the stock is sitting at 73 right now, right, and you're looking at an upside of maybe 82 or maybe a breakout from there. But the downside is definitely huge, all the way back to 50 again, right? So, you could have a big risk over here on the put options, but, limited upside on the call options. So I don't fancy that in terms of a risk reward kind of positioning, Kenny. Okay. All right, great. Any more questions? Any more doubts on the strategy alone, right, from those of you who are with us? Oh, that's weird. I see so many stocks over here. Sorry. I jumped over to Facebook and it didn't came up, right? It's weird. No worries. Let me pick out a couple of stocks very quickly over here. All right, so let me pick out what Uncle Fu suggested over here, PFE. Right, PFE, right? Yes, it looks something likable over here, PFE, right? 31 right now, pretty close to the bottom at 29, right? We could always take 30, which is a nice whole round number, right? Okay, and the upside can sit all the way to like 38 or 40 over here, right? This is a pretty good risk reward. Let's have a look. Pfizer all the way to January, right? So Pfizer all the way to January, selling the 30 strike. Pays me somewhere around $2.10 perhaps, right? I could turn around and buy the 34 call, right? And pay around 170 plus for it, right? So I get about 30 cents to get started, right? 30 cents to get started, okay? Right, so 30 cents to get myself kick-started over here on this trade, right? And if the stock goes to the first target, which is 38, right? 38, okay, second target, which is 40, let's have a look. I have a 34 call, right? So if the stock goes to 38, right, depending on how quick it makes it happen, right, I'm looking at an option premium for the call option that is going to be worth $4 and more, $4 and more, So pocketing 35 cents credit right now, I could be looking at a potential additional $4 of profit on top of what I'm collecting now. If it goes to 40, then I'm looking at another $6 over here. Right, so this looks like a pretty good one over here. Okay. All right, last one that I spotted. All right, if I miss any of your stocks over here, do pardon me. All right, okay, because of the software doesn't pop it up. Right, KO. All right, so KO over here. Now, KO would probably be a stock that I don't fancy structuring such a trade over here. Right now, KO and what we really call the cash cows. Right, the cash cow and boring stocks, boring companies. What they do is they move in very controlled manners. Right, which means they move, within a very tight range all the time. Now, so because of this over here, right, I could probably expect, Coke to probably, trade from 44 to 49, 44 to 49 kind of range, right? And, it might take really, really long to do that as well, right? Now, so, the risk reward again, right? I'm not seeing that. Okay, so I won't like this trade as much. You want a stock that has a strong story behind it, has a strong reason why you believe that it's probably going to rebound. And when it does over here, it's probably going to be a very rich rebound over here. Right now, I'm not recommending this, but this is perhaps something you could look at over here. Wells Fargo. Right now, if you believe in the banking system in America, right, and then you believe that the markets is going to recover, right, and possibly make up for whatever it lost, then the banking sector for one has to recover along with the markets. Okay, not only on top of that, too, right? Wells Fargo is probably beaten down because of all its recent scandals, right? So it probably packs the most upside in terms of recovery over here, right? Because you could see, right, we could sell put options sitting here at about $25, which is already pretty decent, right? But we could get an upside all the way to like 33 on the upside, and if it does break up from here, nothing stops us all the way to 48, right? All the way to 48. So upside 1 is 31, right? And then upside 2 is all the way at 48, right? So if we look at Wells Fargo over here, it pays dividend too, right? To the tune of $2 in a year, right? That's pretty hefty, right? For like a $20 over stock, that's like, oh my goodness, that's like 7% dividend yield. All right, again, that's a 7% dividend yield now. All right, now. So we mentioned earlier, sell the 25 puts, right? Pays you somewhere along the lines of 340, 350, right? And you could turn around and buy the 2750 call. All right, 2750 call. If you believe that it's going to break 30, you could buy the 30 call. Right, and that's going to pay you $1.20 up front. All right, $1.20 up front. Now, so if it goes up to 31, then you're just looking at one additional dollar. Right, but if you believe that it could resume all the way back here to 48, then you're looking at an additional $18 and more on the upside. Okay, $18 and more. Starting off with 120 in the pockets, all right, and if it hits our target over here, then you're looking at a further $18 in profit. Okay, $18 in profit. Okay, all right. David, you mentioned EXPE. If I'm not wrong over here, it's the same as Expedia. Right, okay. So I highlighted to Penny just now as well. Right, so the only problem with Expedia over here is I don't like the risk reward. Right, I don't like the risk reward. Ew, what's going on? Did I load the wrong stock just now? I think I loaded the wrong stock just now. Sorry, pardon me for that. But I still don't like the risk reward because if travel doesn't pick up again and it takes too long, we could see a sell off all the way back to 50 or even this bottom over here of 60. For this particular stock, right? But of course, the upside is high, all the way to 120. But let's say if you really want to structure this, you could possibly do this, maybe somewhere along the lines of 75, right? Sell a 75 and then buy like 87. Let's have a look. EXPE 75 pays you around $10. I would say $11.20 perhaps, right? And then it's costly. You have to buy you realize, David, it's a hard trade to structure. I loaded EXPD, sorry. Right, my bad. Okay. Got the symbol mixed up. David, you see, this is still not a favorable trade to be structured. Right, because the puts are not paying too much, right? But the calls are severely inflated. Yeah, okay, all right. Now, so if I want to start off with a credit over here, I have to buy all the way out to like 100 call, right? And buying 100 call over here, yeah, it's, yeah, all right, okay. Oh, no worries, you're just highlighting to me that I got it wrong, right? Sorry, thanks very much. Thank you, thank you. All right, now, yes. So, but alternatively, since I'm on this stock right now, you like WFC, all right? Yes, it is. It is a pretty good one, all right, in terms of risk reward. As long as you believe that the banks, do have a lot of upside potential. EXPE. Okay, this is where we could go back to Keynes theory, right? That means for a stock like that, if this structure doesn't work out, you could consider yesterday's structure, which means, all right, for example, I do this and I set a $5 upside, for example, all right. So I would sell the 75 puts and then I turn this into a put spread. That means I buy the 70, right? And then after that, I would turn around maybe and buy the 90 call and sell the 95 call, all right, call spread. Now, so you're gonna get paid 15 cents to get this started, but you're capping your maximum profit at $5. Okay, you're capping your maximum profit at $5, right, which is pretty decent anyway. Yeah, okay, which is not too bad as well. Okay, so like I said, certain stocks have to be structured in yesterday's upseller option strategy. Certain stocks can be structured like today with the free lottery tickets, right? So play around with the premiums over here, and you'll start to see which one will fit the bill. Okay, all right, nice. Okay, now so let me get back to my slides. I've got something to announce to all of you, right? For enduring with me over the entire month of June. Of course, I first hope that I've created more values for both my community members who have always wanted to learn more about different option strategies, as well as any of friends over here of our community members who have been joining us, right, because of what your friends have shared with you. Okay, and also totally newcomers over here who have joined us on this journey. Okay, sincerely thank you for joining me, because I hope you have learned a lot along the way. All right, so tomorrow is going to be something really, really special, because tomorrow, right, it's supposed to be a rest day. Tomorrow is Saturday, right? But what we have in store over here is tomorrow we're going to do something very interesting, right? Tomorrow we're going to do this thing over here called, oh, my screen is missing. Give me a minute. Yeah, here it is. Tomorrow we're going to have a session, all right? And the session is going to be called the US Stocks Tryouts. Right, tomorrow we're going to run a session on Facebook Live over here, right, from 4 p.m. in the late afternoon to 5 p.m. Just a short 1 hour over here, right? Tomorrow, okay, I forgot to put the dates over there. It's happening tomorrow, okay, on Saturday over here, the 27th of June, okay, on Facebook Live as well. So do make sure you stay tuned to my personal profile or my Facebook page, right, because you will be notified when we go live, right? So do make sure you join us, because we'll be discussing 2 stocks over here, right, with 2 really, really great trade potentials. Okay, so that's the idea, right? Because following on from 30 days of Project Options Cashflow in June, right, kickstarting in July, what we're going to do is we're going to dedicate 2 sessions a week, right, with no fixed date in general, all right, but we will notify Telegram members, right? This is the reason why we keep telling you to be part of our Telegram channel to get yourself notified. Okay, now we will do 2 sessions a week. One session is how you can generate cash flows. All right, so we do cash flows live with Terrence over here, where I'll do 1 trade together with all of you every week. All right, and then the other one is going to be a stock discussion, where we bring out a potential stock, all right, that we see both upside as well as downside potentials on them. All right, and then we're going to discuss, all right, what are possible trades that we can structure. All right, so this is going to be done not just me alone. Right, I'm going to bring in a fundamentalist over here who will discuss the numbers behind the company, right? And once he's done talking about the numbers behind the company, I'm going to tell you the stories behind the company, right? And then make certain trade suggestions, certain different option strategy discussions, right, on how you could trade the opportunity. Okay, all right. Now I do hope you like that, right? Okay, I do hope you will enjoy that. Okay, now we have not named this segment as well, all right? So do join us tomorrow, because we have set aside something really interesting. all right, and some exciting prizes over here for you, our attendees over here, all right, to help us name the session. All right, okay. Now, so what better way to know exactly what you guys like, okay? Because the session is done and created for all of you. So we'll let you tell us what should we call the session. Yeah, okay, all right. And the most popular suggestion over here, the one that is voted best over here, right, will get to stand to win something, right, really exciting from us, right, as a form of thank you to you over here. Okay, so do join us in tomorrow's session over here, 27th June, 4 p.m. to 5 p.m. in the evening. Right, same thing, Facebook Live. Okay, right now, most of you have kept quiet so far. Would you enjoy something like that? Okay, I may be overdoing this, all right, but if I'm overdoing this, let me know as well. Okay, do you think something like that will be useful to you? All right, leave it in the comments. Let me know. Okay, whereby we go out there, we pick a stock. All right, we might even take suggestions on stocks from some of you. We'll analyze it over here, all right, and after our analysis over here, we'll probably structure up some trade suggestions on them. Okay, right? So let us know if you like something like that. All right, it's really, really good. All right, or you think something else is perhaps more suitable. Okay, all right. Now, so today is also Friday, so Project Options Cashflow will not commence again until day 29, which is Monday. All right, so Monday we're going to kick off the round of strategy summary. Right, as we go into our final 2 days of Project Options Cashflow for the month of June. Okay, so day 29 is going to be a summary of the option strategy over here. Right, so we do hope you join us. All right, and do remember tomorrow, all right, 4 p.m. to 5 p.m. All right, it's going to be your US stock tryouts. All right, come with a suggestion, right, or a best suggestion over here for the title as well. Right, share it with your friends who are investing in the US stock markets because we're not restricting the stocks. We're going for the good and all the bad stocks. We're just going to pick out stocks that we think right now are hot teams in the markets, right? And then we're going to discuss the numbers behind them, the stories behind them, right? And how would we structure a potential trade, right, based on an idea, right, or directional idea that we have formulated over here on that stock. Okay, all right. Thank you very much. Okay, thank you, Kane. All right. All right, thank you, Lydia, for letting me know as well. All right, thanks, David. All right, always a good support over here. All right, David, thank you very much. Okay, thanks, Shiva. All right, now, so that's all I have for you in tonight's session over here for Project Options Cashflow. Thank you very much. All right, for my community members, okay, I'm gonna hop over to do trade maintenance and trade management if any needs our attention tonight. All right, so thank you for joining me over here, and I'll see all of you at 4 p.m. tomorrow. All right, bring your friends along. All right, the more the merrier. Okay. All right, bye-bye, everyone. Good night. Have a good Friday and weekend. Bye-bye.